Amazing. Thank you so much, ma'am. Thank you so much, sir. Well, ladies and gentlemen, now it is time for the most coveted moment we've all been eagerly waiting for. The extremely insightful panel discussion, of which I will tell you a little bit more about. But before that, I would like to take this opportunity to thank some of our supporters who have been there with us through thick and thin to get to you this wonderful, amazing virtual experience. So keep those comment sections going on with shout outs for each and every one of them. Please give a huge round of applause for our powered by partners FIS, our co-sponsors RuPay, SBM Bank, SoftCell, PayPoint, and our support partners FSS. Thank you so much from the bottom of our hearts. Well, now it is my privilege to be introducing to you our esteemed panelists. But before that, let me tell you all a little bit about the panel discussion that is going to happen today. The topic is the digital transformation. Look before you leap. I don't really think I need to give you too much information about this, but ladies and gentlemen, I have to tell you one thing, that this is going to be something so insightful that it's going to change your life. So get ready as we have our panelists for today. First up, we have with us Mr. P.N. Vasudevan, the Chief Executive Officer and the Managing Director of Equitas Small Finance Bank. Next, we have with us Mr. Manian. Mr. KVS Manian, what a warm welcome to you, sir. Thank you so much for being with us. A whole-time director and member of the Group Management Council, Kotak Mahindra Bank. A very warm welcome to you, sir, once again. Going forward, we have with us Mr. Anubrata Biswas, the Managing Director and Chief Executive Officer of Airtel Payments Bank. A very warm welcome to you, sir. Next, we also have with us Mrs. Sujata Mohan, Senior Director, FIS, Asia Pacific, Middle East, and Africa. Very warm welcome to you, ma'am. And of course, we have with us also Mr. Ram Gopal, Barclays, Bank of India, the Chief Executive Officer. Very, very warm welcome to you, sir. To moderate this session, we have with us none other than Mr. Vikas Pandit Rao. Come on, everybody, a huge shout out. Over to you, sir.
Yes, so I'm very excited to have such a senior leaders and the FIAK community members on this panel discussion. At the same time, I'm a little concerned also because as we see the number of registrations that are going up. When we started the session, we had 700 people. Now, in between it went to 1,000, and now when I see it's gone to 1,600, we had kept a capacity of 2,000, so that's a little a good worry to have, but we'll manage it. Without wasting much time, I would straight away come on to the questions. In fact, before arriving at the questions, we took views of the community members spread across 30 countries as to what kind of questions we should ask and who should be the panelist. And I'm very happy that you all have accepted to be a part of this panel. And I kickstart with the questions from the community. The first question is to Mr. P.N. Vasudevan. The question is, we see today, what we see today is a digital and algorithm-based, banking which is happening, and banking expertise is becoming more of a back office. Is banking synonymous with technology, or we see, to put it very simple, is bank bigger or a technology bigger?
Thank you, Vikas. Good evening to all of you. Yes, there is this question whether banks will survive at all, going forward. That's a question which has been bandied about for quite some time now. And of course, we have that famous statement that we need banks, we don't need bankers. So the question always remains whether banks will exist in the way that we currently exist going forward. But if you kind of break that very large motherhood statement into smaller pieces for us to understand what we are really talking about, um, basic banking business is all about the difference between your lending rate and your deposit interest rate. That's a basic business of banking, and that's where most banks still, even today, make the largest amount of money from that. And then, of course, the payments, transactions, and so many other things have come up over a period of time, which adds some element of revenue to the bank and also element of relationship with the customers. Um, and technology wise, of course, there is no doubt technology is coming into every sector, whether it is banking or any other sector. And technology is going to continue to play an important role to facilitate and make things easy from a consumer perspective so that he consumes more and more of the products and services that a bank can offer. Um, Now, coming to the question that Vikas really asked, whether banks will become a back office and technology will become the front end of customer interactions. I think you can see that clearly that within the banking space, the payment space has already gone that direction. In the payment space already, it's kind of gone. The technology companies have the person who acquires the customer and maintains a relationship with the customer really is the technology front end companies, and the banks have really become a back office in that space, just providing the settlement platform for completing a transaction and really nothing else. And if you look at the revenue that banks earn from these kind of transactions, it's reflective of that particular fact. Banks hardly get 5 paise, 10 paise, I don't know, whatever they get. And the remaining everything goes into the front end companies. So the challenge for banks, if they don't want to become irrelevant over a period of time, the challenge for banks will have to be customer relationship. So the banks will have to start focusing and putting more and more investments on the customer acquisitions and maintaining and managing customer relation. So long as a bank can say that I am owning the customer, then the technology or the fintech companies or the technology companies, we will still work with the banks. Will definitely work with them, because the bank doesn't have to go out and spend money creating softwares and creating solutions which already are available in the market. But if they can really work with the fintech companies and use them as a backend rather than we ourselves going into the backend, and if we can spend and invest and work towards creating and maintaining the relationship with the customer, and we ensure that we are the front face to the customer, then the value of the transaction remains with the bank and it doesn't go away from the bank. Now, forgetting the payments, which is already kind of gone. If you look at the other aspects of banking, lending, digital lending, there's been a lot of hype around the digital lending. It's been, of course, a decade of digital lending, but we are yet to see really a sustained and sustainable kind of model in fintech lending. But banks are also very active in that space. It's not like banks have become laggards. I think the payments took the banks by surprise, and I think they've learned from that. And the newer areas which are coming up, banks are trying to be as nimble-footed or as quick as the fintech companies, and reasonably able to compete, if not directly, at least with the help of other fintech company supports. So I think if banks want to be relevant and they want to be remaining intact as a business model, and not just become a back-end service provider with taking a 5 paise, 10 paise kind of cut on transactions or on the revenues, then I think the banks should really invest on the front end, go out and get the customer and acquire and maintain the relation with the customer, and very, proactively work with the fintechs at the back end to try and leverage all the benefit that they can bring to the table, and be the front end to the customer. I think that's what is required of banks going forward, whether it is digital lending or now digital deposits also are getting traction now. I mean, can you just imagine that if some front-end digital company, fintech company, suppose they are able to acquire, let's say, 1 million depositors per month, and then they can go shopping around with the banks and say that I get 1 million depositors every month. Which bank will offer me the highest commission or whatever within regulatory framework, whatever? Then the banks will have to start competing, and the revenue share, you can imagine, nothing much will be left for the banks at the end of the day. So I think this is where the banks will have to focus and be out front there, acquiring customers and maintaining relationship, and ensure that back end we don't waste our time trying to develop technology, but use technology as a back end service provider. That's what I believe should happen going forward. And the banks which can do that definitely should be much better off than maybe banks which are not able to do it.
Amazing, amazing. So one of the questions that in fact, that keeps coming, is every day we see so many outages in the bank, which are reported across the globe. And the bank's main fundamental premise to all the customers is that trust in banking. Now, all these outages, how do you link it to the trust? Do you see it impacting the trust in banking?
See, so long as it's not very frequent and so long as it's not for very long, I think people generally, I mean, we also understand. I think as a consumer, all of us understand because we deal with other service providers also. I mean, we use a telecom as a service from telecom companies. And I think all of us have gone through enough experience that you go to a particular place and you see a TV advertisement and he's standing on the toilet trying to get his connectivity. So I think generally people do understand that yes, there are certain kind of limitations in terms of service, but banks are kind of put on a high pedestal by the society, because they have their money parked with you, and at a minute's notice they need to take that money. It could be an emergency, it could be any particular reason, and at that time if they can't take their money out, the frustration can be very high. So while I'm sure, as a consumer, people will be willing to accept certain level of, discontinuity of service, but the fuse is very short, really short, and it's getting shorter by the day. So I think banks have no option but to go and do heavy investment on the technology backend to ensure continuous service to the customers. And you are right. I think the question is very correctly worded. If you have frequent outages and things like that, I think you will see customers shifting, and definitely they will shift because they don't believe that this bank is something where they can get in and get out at any time they like. So this used to be an issue at ATMs. There have been enough instances where you go to an ATM and it says out of service or no cash or something like that, and then you kind of just scream at the machine and then you get out. But that is not kind of consolidated. Somebody screams in one machine in one place and another guy is screaming into a machine in another place, and it's not getting consolidated. But in today's world of net banking and social media, now some of them are getting so consolidated that quickly people are able to share experience, and suddenly it really looks like a million customers having a problem with your bank, and that becomes a major issue. And I think seriously such banks might start losing customers in the process. I think these outages are very critical. No bank should allow that. You have no choice but to invest a disproportionate amount to keep your service continuous. And if you are not able to do that, I think we will have to face serious customer, attritions.
Brilliant, sir. In fact, one of the words that you said in the entire thing was technology investment. I'm sure all the tech companies or the leadership team will be very happy to see that statement coming from a well-respected leader. Now coming to the other question. This question is to Mr. Ram Gopal. There is a common perception that banks are in a race to launch the product first. And what we have seen is majority of times when you go to meet the branch staff or the end customer, they are not aware about these tech-based products. So is the product launches of the bank more of a PR story rather than solving the customer problem? What is your view, Ram?
Thank you so much, Vikas. That's a pertinent question. But before I jump into that, I just wanted to congratulate Anuradha and you on your anniversary of this new baby of yours, and also to the wider community. I think I've been associated with this since idea, and to see it at such a mature stage, it is really very nice to see the evolution. One quick comment. This is to the question that you posed to Vasudevan, sir. I remember when I joined the banking industry some 30 years ago, I think there was this distinction between the front office and the back office. And I started in the back office. Over my career, I seem to have now landed at a stage where the back office is literally the business now. ONT, or Ops and Technology, is literally creating business models today. So to that extent, I think the journey I have traveled. Now the next journey is banks itself becoming back office. So thankfully, I'm one leg in the grave. Maybe the next generation coming in will possibly face the situation of the relevance for banks. So well said, Vasudevan, sir. Coming to the question that you were asking about, whether this is a PR drill. Now, because there are many different angles one can use to answer this question. Of course, you could use the lens of this tyranny of complexity. The banks, have a suite of products or suite of product features, and there is no ABC analysis done over time. There is clutter with no clear delineation of what creates value and what doesn't. So there's one perspective. But the perspective that I want to bring forth today is the perspective of, does first mover advantage exist? And the thesis that I have is these, banks rushing or fintechs rushing or anybody rushing to launch products, etc., could be because they are after this first mover advantage. This is of interest to us because we are a 325-year-old elephant, and sometimes elephant can't be taught new tricks to dance, right? So we kind of figure out whether it is advantageous for us to be first movers. Yeah, sometimes the same question could be is it's not a choice of whether we want to be in a product category or not, but it could be a question of whether we want to do it now or later. So I think if you look at that from as the perspective to which I want to approach your question, then I guess my thesis is that it isn't naturally the case that the first mover advantage exists. It does exist, but not categorically so. And there are two, I think, defining characteristics when one needs to think about whether there is first mover advantage or not. And that is one about how is your product or technology evolving? What is the pace of change of the technology or the product? And the second dimension is what is the pace at which the market for which that product or technology is catering to is evolving? So I think these two questions are a necessary question to understand from what resources the firm has in order to answer the question of whether there is first mover advantage or not. And if you think about this, you can do a simple 2x2 grid, right? On one side, you would have market evolution, slow and fast. And the other one, you would have technology or product evolution, slow and fast. And you have 4 quadrants. And you can, in the classic BCG style, you can start naming them depending upon how you would like to think about it. So the one that I want to talk about is one extreme, which is what I call the calm waters, where the pace of evolution of the product is slow, where the market is also evolving slow. And like I said, I am not a digital native, I am a migrant. So my examples are, let's say the vacuum cleaner or the Scotch tape. I mean, neither the market nor the product has really changed, right? The vacuum cleaner was discovered sometime in 1900 or invented sometime in 1908. It was like a stick with a bag. And then in 1935, an innovation came whereby they put all the vacuum components in a canister. But literally, technology around vacuum cleaning hasn't really changed. Even today, I don't think really this has changed much. And even if you look at market penetration, I think 1935, when that canister was brought in, there was only 5% of households where it had penetrated. So in those cases where the market is moving slow, where the technology is moving slow, I think the first mover advantage is possibly there. And frankly, Vikas, is there any market like that in today's world? So go to which is what we call rough waters, where the technology is evolving fast, the product or the market is evolving fast, which is where much of us find ourselves in the 21st century, right? And here there are a couple of things that I think make sense. I think in some sense, first movers make sense if there is a go in and go out strategy, if you can time your exit properly. And if you look at some of the success stories that we have seen in the startup world today, I think the founders are very smart, right? I think they're kind of timing the exit very well, because neither do they have the resources or the brand recognition or top of mind recall for customers in order for them to play long. So at the first opportunity, I think they are willing to exit. And a classic example of that is, if you go back again, a digital migrant example is how Netscape, in the browser technology, they sold off to AOL just around the time Microsoft came up with their Internet Explorer. So all in all, long story short, all I'm saying in response to your question, that I would carefully, if you want to really make money, not just growth, but profitability, then I would look at the characteristics of the market, I would look at the characteristics of the product technology, and I look at the firm's own resources. Do I have the brand? Do I have the financial wherewithal? Do I have the marketing cloud? Do I have the distribution? And what can I bring to bear if I want to play this first mover advantage? Otherwise, doing it because I've got something, to build up a hype. So long story, but that is my response.
Great. So second thing is about while you talked about the early exits and making money, the question was about, are we putting customers at risk by launching products which they are not educated, and pushing these products onto the customer through the branch channel, which is not ready to take on these kind of products queries. Now, to put it further, do you perceive digital literacy as more of an obligation and more of a CSR activity on the part of the banks, or maybe even for the fintech companies, or do you see that as a tool for customer acquisition? Because what we have seen is the digital literacy is more of a number game. People say that I have done 1,000 trainings, 1 million people got educated, and the qualitative aspect of the digital literacy is missing, and a lot of technology tools are used, but the experience of the chatbots or AI-based solution has been really frustrating. So, what is your view on the human aspect of digital literacy?
I think very pertinent point, Vikas. I think digital literacy, financial literacy, and maybe credit counseling. I think these are, in my mind, the key pillars, for our, next step forward. But let's just kind of, think about this. I think the first and the foremost, I'm from the camp, and I believe this wholeheartedly, that I think, this is beyond CSR. The literacy efforts, goes beyond CSR. It is certainly an acquisition and retention tool. If you talk to anybody, and in your own experience, you would know this, because I think, we talk about one of the principal enablers for digital transformation in any company is, internally looking, it's all about, there is nothing but very similar things, right? You facilitate the right environment inside the company, it's called culture. When you try and do it externally to the company, it's the literacy effort. That's how I see it. So I think it is intrinsic in how we have to think about, the days to come. And I can, maybe a couple of quick anecdotes from, our call center, just to bring home the point around what's the human element. And before that, I think I agree with you on the chatbots. In fact, I don't know whether you followed this. Forrester Research had predicted that 2019 would be the year when you would have customer backlash on chatbots, because slowly but surely the NLPs, the natural language processing, has become mainstream in customer service, that people think that AI chatbots is like a shortcut to support costs. And therefore, there is no question that it has created dissonance. But I think, in order to improve context and for the ability of the chatbots to understand context and intent, I think there is a whole journey to travel. But quickly coming back to these couple anecdotes from the call center, that kind of brings the human element to this. So this is about a 78-year-old, and this is of course a UK customer. But I mean, the situation is the context is so transferable even to the Indian context. He was looking to send money to her grandson, and the grandson is based in Australia. So she's been trying to go into our open banking website and trying to locate the Aussie dollar to make payments. And after a lot of struggle, she came to us at the call center, and the agent spent an hour with her trying to take her through the steps of how to make that international transfer. And one of the efforts for digital literacy that we have is this demos, digital demos as we call it. And we sent that over to the client and said that maybe we could set up some time tomorrow and try and take her through, because she was getting frustrated after spending about an hour on the call with us. And next day morning, when our agent called her, to our surprise, we found that she had progressed a little more than she was at the last day. And this time around, she found where the Aussie dollar was, and she was able to conduct that transaction all by herself. Not only that, she followed sending a transfer to another grandson, this time inside the UK itself. So, a simple example which shows that how it is important for some of these, like me, migrants, to be able to understand how to engage with these digital tools. The other example is on the acquisition side. Another example is we have something called digital zones. So a client gets referred from the banking hall into the digital zone. This gen comes to us and tells us that, hey, I want to help register this new device for your mobile app, because we have a registration process. And as the agent was doing that, we get to ask the customer as to why is it that he's looking for new registration, because he's a customer of long. And he says that his phone got damaged and here is a new phone. And that was a good moment for our agent to cross-sell what we call as a Barclays tech package, which is some insurance for the tech devices, etc. So some simple examples which proves the point that literacy, when in a moment, I think will certainly gain currency. So I'm certainly in the camp that it is beyond CSR. I think it's a vital tool, and I think it is going to predicate success for digital transformation.
Fantastic, sir. This was a brilliant answer, and I'm sure the community members would have been very happy to hear your views. Now, the next question is to Mr. Manian, and I have been waiting to ask this question for a very long time to you, sir. The central to the entire digital strategy the bankers have been talking about is the fintech and bank collaboration. And fintech means startup. Now, why are banks not supporting these startups? Especially the bootstrap startups I'm talking about. Whatever collaboration we see or whatever launches we see are only about VC funded or private equity funded startups. So why isn't the startup the responsibility of the banks? These are some of the direct questions, but then these are from the communities which are coming in. So
yeah.
And the community will be very happy to have your views on this.
Yeah, of course, by using the word responsibility, you make me scared. We are responsible for a lot of things like growth of India and credit offtake, all of that. But having said that, that was on a lighter note. But I don't quite agree with your sentiment on that. I look at it this way. I think the startup bank relationships, essentially, at least the way I see it, is for three reasons, right? One is access to customer base, right? Banks have a customer base, and fintechs want that access to that customer base. Second is a kind of a business model validation to figure out what works, what doesn't work, some experimentation with the customers of the bank. And the third is the access to capital, right? So on the first two, clearly the banks and fintechs have a relationship which works. It's very easy to see the benefit on both sides of that equation on that. On the capital, banks can of course provide capital. I'll come to it in more detail. But many times I think when you talk capital, there are two kinds of capital, right? Debt capital and equity capital. I think with the kind of failure rates one sees in startups, not necessarily in fintechs, any finance 101 will tell you that debt capital is not the right capital to use for startups, right? It is equity capital. So let's park the debt capital aside. On the equity capital, actually, let me flip that question to the other side. Should all fintechs be looking for equity capital from one bank? Is it really right for them? If usually most fintechs would have a multi-bank model, and one bank investing in a fintech can actually inhibit other banks from partnering them. So I'm not too sure that bank is the right source of capital all the time. There are situations in which it is. So I think the neutrality of that ownership is very critical for success of the fintechs. So I would put it this way, that PE VC funding is not a bad idea. It's actually a good thing that PEs and VCs fund some of these startups, because they allow them to remain neutral and give them ability to work with multiple banks for their products, right? So that is one part of it. Looking at it from another lens, again, there are three types of business models that these fintechs adopt. I would say the first one is what competes with the bank, like Vasu said earlier, right? In payments, there are people who are competing with the bank. So obviously, no bank supports a startup which wants to compete with itself, right? So that's clear. But there are two other models. One is co-creation, where you create products and services along with banks, or you work on a model which is collaborative. There is benefit to both sides. There is no reason at all why banks should not work with fintechs when it's either a collaborative or a co-creative model, right? And banks do want to benefit from startups, the agility, the ideas. It's in the interest of banks to work. Any progressive bank would want to work with them. And there will be situations where they will put in equity into some of these businesses. In fact, even before I go into that equity, I'll come to that at the end. One must remember that banks are highly regulated. They are conservative. They are not going to be as fast, as nimble, as agile as the fintechs, and therefore it's not easy to make them work together, right? And banks have to really work hard. I would say it's a disadvantage banks have. So they must really work hard to make that work. The good thing I have seen recently, a concept of regulatory sandbox that RBI has introduced, I think is a very, very good idea. I think it allows banks to take a regulatory and compliance risk in a controlled environment under the kind of surveillance of the regulator. So I think these are good developments. These will help banks to overcome the problems they have in dealing with far more agile and far more aggressive mindset fintechs. So I would say that a middle ground regulatory sandbox is a good middle ground that has been found. And I think as we progress, banks will get more confident and find that middle ground to work with fintechs and startups. Coming to most progressive banks, I would say, are doing at least three things to work with fintechs. One is, I think many of them run things like hackathons, and where they invite startups and look at whom they can work with. There are many of us have set up, including Kotak. We have set up an innovation center whose primary mandate is to work with other fintechs and create products. And the third, again, both in our banking and in our securities business, we have created a small pool of money where we have said that we are willing to invest in startups which will work on projects which we find of mutual interest and strategic importance for us. So I don't think it is right to say that banks don't support it. I think many progressive banks already do, and going forward, many more will do. And I think it's something that all banks will have to learn to. In fact, Vasu in his early statements said that banks will have to learn to function in a way that they maintain their relevance. And I think fintech collaboration is an important part of that relevance, maintaining that relevance. So I don't really agree with you that banks do not do it. Though I don't see it as a responsibility. I see it as a purely commercial interest, business interest. In their own pure business interest and commercial interest, they should be collaborating with fintechs. That's the way I see it.
Great, fantastic. I'm aware, Mr. Vasudevan had commented about this some time back in the community. So would you like to say something on this question?
You mean on the collaboration part?
On the supporting the fintech and the startups. Would you like to comment, and especially from the bootstrap perspective? Everyone doesn't have an access, like Mr. Manian said, that they have their hackathon event and all. But a normal startup, which is maybe 5 to 10 employees, they are not able to reach out to the banks, and they are not able to get an access to this. So would you like to say some views on this?
See, I think it's all about what's the value the fintech brings to the table, because a bank is not necessarily a social, organization. It's a commercial entity. So the central purpose or objective of a bank is not really to go out and support the ecosystem of startups or anything like that. I mean, that's not even remotely in the horizon of the purpose of a bank. The purpose of a bank obviously is to run a commercial bank which is commercially viable and keep it safe and sustainable for all stakeholders. So that's an objective or a purpose of a bank. So I don't think we can in any way try and expand that into a social kind of role of supporting a startup culture or a startup network and things like that. So it's not going to come out of charity, that's for sure. Then how will it come out at all? And it could come out if fintechs are coming up with ideas which are very relevant for a bank to look at. I can tell you in our own example, we found one fintech operating somewhere in Gurgaon, if I'm right, and they have come up with a very interesting idea, really interesting idea. It's a very small fintech, just startup, a reasonably new startup fintech, but they have come with a very good idea, and we have been doing certain type of business, and the way they have approached that same business, I mean, we've been doing it for over a decade now, but the way they have approached it, the way they have tried to address the same business model from a very different angle, suddenly opens up a new segment of customers to us, right, which we had not even thought of so far. So now we are dealing with that fintech, dialogue with the fintech to see whether, one, we should just have a commercial relationship where we use the platform or technology, or should we even go beyond that and take some stake in them, and things like some discussions are going on. So all I'm saying is that definitely banks would be very keen or very happy. I mean, you have the free charge and other examples, I'm sure. So banks would definitely be keen to look at this kind of joint venture or taking a stake or in any which way supporting a fintech, So long as the fintechs are able to come up with very, very nice, good, kind of innovative ideas, which helps the bank move forward in any particular direction that the bank wants to move. So I think it's very relevant, absolutely relevant. I think fintechs should reach out to the banks as much as they are reaching out to the Ps and VCs. I think there must be a way in which they should be able to reach out to the banks also, because for us it's a lot more bread and butter. It's not just about a financial investment. So yeah.
Fantastic. Very great statements from you and Mr. Manian that fintechs are welcome. If you have a value proposition, our gates are open. So I think very fantastic. I'm sure the fintech community which is watching this will be very happy to hear this view from the thought leadership coming in. Now the next question is to Anubrata Vishwas. And since this is a telco-led bank, the question is more led to the something in relation to the telco. The question is that today there is a glut of OTP demand. For Aadhaar you need an OTP, for a bank you need an OTP, for a digital signature you need an OTP, you want to order a pizza you need an OTP. Now it's very difficult to differentiate it between what OTP has come for what, and what is your perspective about the safety and the usefulness of these OTPs which are being asked left, right, center for everything that we do?
So firstly, Vikas, thanks for inviting me. It's been really a pleasure to be on this panel here, everybody. I've thoroughly enjoyed myself over the last 60 minutes. I must also congratulate FIAKs on the wonderful job which is being done. This is an incredibly warm community. And I am part of the WhatsApp groups. I do see a lot of very thought-provoking questions and ideas coming up very regularly. With that, let me sort of call out that it's a technical question you've asked me after all these strategic questions which have been posed to all our esteemed panelists. And let me try to answer it a little strategically. We are caught between the devil and the deep sea. An OTP really satisfies three criteria. Let me talk you through those three criteria and then really ask what's the alternative. First is the criteria of proximity. An OTP comes to you at the point where you are close to you, right? And that is necessary for a transaction to really get concluded. The second factor is that the OTP is a low-cost solution, right? You have to have a solution which is scalable, which can address really billions, indeed trillions of transactions in the year. The OTP is the only sensible low-cost solution which you can think of today. And the third is that the OTP is immediate, which means that a transaction can be concluded on time, right? Now, if you look at these three factors, immediacy, cost, and proximity, you don't have a single viable alternative solution in the country or indeed globally operating today. There is a fundamental problem which is still unaddressed, and that's the problem of disclosure. All of the issues of immediacy and proximity are actually taken away if the consumer discloses the OTP to someone else, and that squarely brings us to the point of fraud which you mentioned. So I want to really take this conversation a little ahead and project into the future of what may be, and talk a little bit about how we are thinking about it internally and what are the products we are planning to come up with in the next 7 to 10 days. So the first is that our view is, if you extend it over the next 2-3 years, certainly biometrics and wearables are going to be a very good solution, or I would say a X and Y axis solution to the problem of immediacy, cost, and proximity. Take, for example, NCMC. You're traveling on the metro, you can just tap and you can go ahead, no requirement for an OTP. Immediacy, cost, and proximity is really addressed. You can extend that to wearable watches. You can even extend that to a neighborhood village where you can authorize a transaction just by looking at iris and authenticating with your eye, right? These will happen. I think it's a matter of time, but it'll happen sooner than later. For our world today and the way we are imagining things, imagine what could happen if you were to imagine the telecom network using the SIM to provide a extra authentication message delivered through the air as the third message before an account is debited. We've piloted this solution, and what it solves is the problem of disclosure, which I was mentioning. This is a real-time message which is going to pop up on the phone if the user has a SIM and an Airtel payment bank account, and it will squarely address every single instance of digital fraud where the consumer discloses his OTP out to a fraudster, because there is a real-time message which is going to be served right at the time before the transaction debits the bank account. We are calling this Airtel SafePay. It's zero cost, only applicable to Airtel Payments bank accounts and for an Airtel SIM. This is our limited way of addressing the fact that digital frauds in the country have gone up roughly 3 times in 1 year in the country. And we are very conscious of the fact that while digital payments have gone up, the number of digital payment users have fundamentally been stunted. It's roughly today now around 175 million users. 3 years back, it was 150. We believe that there are 25 to 50 million new digital payment users who can potentially come into the, what I'll call the fray, the moment you are able to assure people that their money is digitally safe.
Fantastic. Fantastic. So what about, having a standardized message? Today, do you think there needs to be, I know everything, you cannot have a regulatory guidelines, but should there be a standardization of the messages that are sent out for all the entities, not just banks, every entity that operates and sends out an OTP to a customer? That what, do you see a role here from a regulatory perspective which needs to be played?
I mean, because I have to say, and I will answer this a little lightly. I mean, frankly, if the industry were to answer the 4 problems of immediacy, proximity, cost, and disclosure, confusion as the 5th problem we can deal with a little later.
Okay. Fantastic. Now, the next question is to Sujata Mohan from FIS. In the bank and technology collaboration, there is a thought about a multi-vendor strategy and a single vendor strategy. Today, banks are running behind L1 kind of vendors, and they're getting a cheaper solutions and going ahead and launching the services. And sometimes, basis whatever we hear in the community, this could be one of the reasons for the outages in the bank, because when they ask there is a problem, they say from our side the system is working, but the other vendor has not, the systems are not able to accept our request, or the core banking system is not accepting the request. So what is your recommendation? Because you have worked with a technology companies, you have worked with the banks also, so you have seen both the sides of the stories. So what is your recommendation, and your experience on single partner versus multi-vendor strategy, and how can what is your guidance on that?
Good evening, everybody, and it's been a pleasure being on this panel, and very, very interesting insights that I have heard. As you said, because just to start from that point where you started on fintechs, right? I just want to make a slight change to the statement. I believe that fintechs, banks, and large technology companies actually could have a very symbiotic relationship, and I'll take you through as to why I think it's very, very relevant, right? So now if you really step back and see what fintechs have really done, and why is it that, as Mr. Vasudevan said, they've taken away the payments industry and so on. What they have done is they have used the same rails that a bank had and changed the way in which it was being consumed, right? They have reimagined the proposition, they have reimagined the process flows, they have reimagined the customer experience and so on. And in the process, they have kind of back-ended the bank to a point where today we actually discuss who owns the customer. in reality, I don't think there is a question like that, because when you sit down and think back, regulatory, the banks own the customer. So shouldn't be a question like that. But the way in which it has got structured, it has, banks have gone to the back end. Now, in real fact, when you look at these partnerships, this whole structure in which these relationships have evolved, I find that fintechs have slowly started becoming vertically stronger and stronger, and have started using banks as merely a ledger rail, right? An accounting rail, and making it more and more impossible for and sometimes banks have possibly willingly given up this without realizing where it could head, in a way, and sometimes consciously so. But at the end of it, I think the fundamental thing about and why a multi-vendor versus a single vendor in the context of fintechs is important is when you allow fintechs to build the entire vertical stack, whereby your own technology space starts getting absolutely broken up, or spread out too thin, or siloed, because you have just for a moment, if you take a lot of UPI PSP players have started holding the entire stack with them, and what really happens is that the bank's UPI transactions and their UPI transactions don't even flow through the same risk management system. And fundamentally, I believe that the one thing that everybody has to be conscious of is these startups and fintechs bring a lot of value, and there is no option but to do collaboration. But I think the fundamental core should not be given up by banks, because finally, regulatorily, compliance, and to the larger, even from a customer perspective, finally banks are held accountable. So my sense has been, and this is a conversation I have in multiple places, is that banks should possibly tie up with for the core platforms, right, where most of their transaction flows happen, where the voluminous transactions are hitting, while there is a general belief that possibly fintechs do better tech, it is still important that banks put their own strong basis and expose things like innovation on the top, which helps access more customer base, or use the existing customer base much better, but not give up the control on that. Just to give you a simple example, right? Today, if you take a UPI transaction or a card transaction and allow for them to hold the switch, the core processing, then where will you do the governance if you're sitting as a bank? And that's, I think, where the shake happens. The second part of the issue is, should banks be having multiple vendors? How do you then take a strong partner, and then after having exposed your systems to fintech partners, how should banks then become comfortable in this environment? I believe banks don't have much of a choice but to operate in a best of breed world, right? Because I think it's all about experience. Why are people walking away with our customers, bank customers, right? Because the experience at the front has been so good that the customer is willingly gone and used another platform, where at the end of it he trusts his money with the bank, right? So I think banks will have no choice but to possibly find ways to deal with this. But and so some of the critical platforms have to be owned by the banks, and they have to expose the other stuff. The other aspect I also believe is that as we are growing into a microservices oriented, platform oriented strategy and so on in the tech world, banks have to become more comfortable with not necessarily vendors, but controlling the solution by taking services from everybody. So take a service like onboarding service from a SignZ, take a credit Vidya service, but control the credit side on your side, right? I mean, if you were to operate like that, then you are still comfortable with multiple vendors, but you're controlling your own ecosystem, you're controlling your own.
I'm sure the entire community would be very, very happy to hear your responses to some of the direct questions which are typically people are apprehensive in asking. And I'm really happy to see each one of the panelists had demonstrated thought leadership in responding to all the questions. So with this, I think we move on to the next activity in the FIAK Leadership Conclave. I thank you all for coming here and addressing the concerns which are raised over a period of time.